Hello traders! In this video, we are going to talk about contracts for difference, which are also known as CFDs. This video is going to solely focus on CFD. We are going to start with some general information, followed by history, pros and cons, specifics of long-term holding of CFDs, and main reasons to trade them. We will end the video with a trading example on a CFD compared to the futures market. CFD is an agreement between the buyer and the seller, which obliges the seller pay the buyer a difference between the current value or the asset and the value of the asset at time of contract closure. If the price is negative, then the buyer pays the seller. CFDs are financial derivatives that allows us to speculate on the price development of the underlying asset without the need to own the underlying asset. It is a so-called derivative what covers a wide variety of financial instruments traded on both stock exchanges and over-the-counter markets around the world. The term financial derivative is based on the meaning of the English word derive. It is, therefore, a kind of derivative of a particular asset. In our case, it is a derivative of the selected financial instrument traded on one of the world exchanges. We also call this financial instrument an underlying asset, and this can be stock, index, commodity, currency pair, cryptocurrency, or so on. The price of derivative is fully dependent on the price of the underlying asset. For CFDs, it is 1990 when a first derivative was created by famous London broker Smith Newcourt. It was a financial product that bore all the benefits of trading stocks without the need for their physical possession while minimizing their disadvantages. Compared to shares, it was several times cheaper and allowed to take short position without the need for the previous borrowing of shares. At the end of 1990, a company called G&I was allowed to trade CFD contracts directly on the London exchange by forwarding instructions over the internet. Nowadays, CFD trading is very popular and is offered by many brokerage companies. CFDs are traded to profit from price differences between sales and purchases. CFDs are therefore among the financial derivatives that are always linked to its subject's underlying financial asset. The specific type of the underlying asset is levied by each intermediary company, brokers, banks, etc., according to its capabilities. Most often, this is the currency pair, stock, equity indices, commodities, bonds, interest rate, etc., traded on a world exchange. The main con is that there are no standard contract terms for CFDs. Each provider can use its own, but the substantial part is common. CFD thus constitutes a contractual arrangement between the seller's party and the buyer's party, as we already mentioned. Holding open CFDs is possible, but it should be remembered that even though CFDs do not expire, the trader can be charged for overnight holding. This means that profits and losses in favor of the client's account respectively were realized and any fees would be recovered. The position is then transferred to the next day. The norm is that this process takes place at 10 p.m. of British time, but this differs from broker to broker, and it is always necessary to verify the specific terms of your account. The main reason to trade CFDs is that they are available with many brokers who also provide classic investment products. The first execution method is the so-called direct market access, DMA. Some providers, often DMA, and allow you to directly enter the world markets, plus you can see the depth of the market, DOM. Access can be given to a wide range of financial markets, mainly to stocks, forex, options, CFDs on commodities, or bonds. Since you have never owned an underlying asset for CFD contract, you can trade markets that are otherwise non-negotiable for retail traders, such as indices. With CFD contracts, you can benefit not only from a rising price, but also from the price declines. Most stock, CFDs, can also be shorted, and you don't need to borrow stocks as you normally would for traditional investments. On stock CFDs, you pay expenses in the form of spreads, swaps, and sometimes also the commissions. CFD trading can be unlimited. This means that you have access to financial market 24 hours, 5 days a week through various brokers. Such trading is called continuous, as you can open and close a position even when the market for the underlying asset is closed. CFD trading has no fixed trading hours. Some brokers have an expiration date of the future CFDs already built into the platform, corresponding with the underlying asset. You can hold the position for an arbitrary length or time and close the trade when you really want. CFD trading can be extremely fast in this case. It depends on the broker's execution time. You should know that the good trading platform has live market data feed and various automated trading systems that can work its logic on these data changes immediately. CFD contracts are traded with leverage, so you don't need a high initial capital to speculate on short-term volatility fluctuations. This means that you only need a fraction of the position value to open the order, and you can use some of your capital for other purposes, such as scalping other CFDs. However, you should remember that even if you do not physically buy the underlying asset, you are exposed to the underlying markets, and there are different risks involved. In the case of leverage, it should also be remembered that while it reduces the margin needed to open a trade, profits, if any, may be significantly higher than when trading without leverage. Obviously, the same applies to losses too. Let's say that we want to trade the very popular German DAX on the futures markets. Due to the large volatility, the intraday margin is around 11,000 euros per contract. The intraday margin is the reserve deposit on the account for opening the trade. If we were to hold the position overnight, then the margin reaches far beyond 21,000 euros. How about commissions? Well, the commissions for the trading CFDs are generally far greater than on futures. However, the truth is that the trading futures is still much more difficult financially, also for the reason of paying for the data feed and platforms. If we focus solely on trading commissions, then trading futures is cheaper. All-inclusive round-turn commission for DAX costs 6 to 7 euros on average. The commission for one standard lot traded on DAX through CFDs is approximately 20 euros. It is important to take into account that the majority of the retail traders don't have 21,000 euros to spare for trading DAX from the beginning. This is where the best advantage of CFDs comes in place as opposed to the futures. Dividing the position enables us to trade DAX with much smaller capital requirements. From the risk-taking perspective, having the possibility to trade DAX through CFDs is yet more significant. From the commission comparison perspective, it is apparent that experienced traders managing multi-contracts rather than trade DAX on the market as the difference in the commission is notable. In the last column of the table next to me, we can see the DAX position size 0.2 lots traded through CFD. The beauty of CFDs is in the possibility of working with the multi-contracts while having a small capital. If we were to trade the highest position of 0.2 lots while having two different profit targets, CFDs allows us to enter twice by 0.2 lots each and set the required parameters separately. Finally, it's important to mention that trading the futures indices through the CFDs isn't suitable for all markets, and this is due to the costs associated. This is predominantly for short-term traders who target small profits. Taking about the DAX index, the ratio between spread and the daily range is actually very good. The average daily range of DAX for the past 100 days is 224 points and the spread is 2 points. This makes DAX an ideal market to be traded through the CFD. Other optimal markets for day trading CFDs would be Nasdaq or gold. Alright traders, if you have any question, or you have not just understood something, or you are just interested in something, just let your comment down below. Please don't forget to subscribe our YouTube channel, and I thank you for your attention, and I wish you steady study, and see you next time.